Welcome back to another episode of the Lofty Lenders Homebuyer Education, where we explore tips, tricks, and stories that help you plan for your next home purchase. Whether you're a first-time home buyer, a move-up buyer, an investor, or just looking to learn, we hope you gain a little bit of knowledge today. Today's topic is going to be about, should you buy or should you rent in today's market? With interest rates, rent prices, and home values all moving in different directions, it's easy to feel stuck. So let's break that down for you. First off, Charlie, is buying still a smart move, or should everyone just start renting?
Honestly, I think that's exactly where you and I have focused, and our answer hasn't changed for years. And it's buy when it fits your budget, because we want that appreciation. So we don't want you to buy too soon if you're not ready, and we don't want you to be too picky and put it off. So the best time to buy is when you know you want to be in an area and you're ready to put some roots down, because it's not something you want to get rid of in 6 to 12 months. So now's a great time as long as you want to stick in the area.
And I think as long as you feel comfortable with making that payment, but also having money for those extra expenses that we talked about a few weeks ago, for the the maintenance and things. I see too many people that buy a house and they have no money left over. Well, as soon as that furnace goes out, as soon as something happens, you're in a bad situation.
Yeah, and life throws us zingers. I mean, we aren't just accounting for what the house is going to do, because you got auto and medical and jobs. There's always stuff. We don't want to add a burden without having some reserves and make sure that you're ready for that. Even if you're not used to it, you can still have a little bit of preparations in there so it's not so bad. But got to be ready.
Yeah, and I think renting gives you that flexibility. There's fewer maintenance headaches. You got lower short-term costs. But obviously the downside is you're not building that equity or ownership. And equity is, it's continuing to compound every year. You just keep growing more and more value in your home that you're not going to get while you're renting.
Yeah, and that's part of the pride of ownership. I mean, as renting can be very flexible when you don't know what you're doing. You might just out of school, switching jobs, or you move to a new area and you don't know which neighborhood to be in. There's really good reasons to rent, but when you're ready to really put some roots down and make it your own and not have a landlord tell you what you got to do, there's just a mixture. You got to make sure that you make the right decision for you, but at the same time, don't be afraid of it. It's a move that we can help you do confidently, and so that way you're getting the appreciation and finding the house you like and enjoying the neighborhood. It's a great decision when the time's right for you.
And I think an easy example of how to kind of break this down for somebody who's maybe not really sure what equity is. Maybe this is the first time you're hearing about equity in buying a home. So if we envision that you're paying, say, $1,900 a month in rent. Over the next 5 years, you're going to spend about $114,000, and you're going to give that all directly to your landlord. That's going into my pocket as me being the landlord of you. That is not helping you in any way, shape, or form. You'll never see that money ever again. Now, on the flip side, say you bought a $300,000 house and your monthly payment's right around that $1,900 to $2,000 a month. Part of that payment's going towards paying down the principal, and you also get to keep that because now that's equity you've gained in the property. And the home value has continued to increase over time. So suddenly you went from, I'm going to make back at least just what I've put into it to, I'm going to make back what I've put into it. Plus, it's just growing because there's not enough homes out there. The equity continues to rise.
And that's one thing, depending on the price point, because you're going to get a lot of different online searches where it's like, you should or you shouldn't. I think the grain of salt that we look at is the smaller the home, typically the more demand, because the lower price points, you just can't add those into the market. Whatever's there is there. You're waiting for something to come up. The more expensive the home in that area, you can produce more homes at that price. So there is more options and more availability. So you might not see the appreciation as much in the high end, but in the first-time buyer, second-time buyer, and the low and middle price points, it's really hard to get new inventory. It's recycled inventory. So you tend to have a better chance at that appreciation, and you just got to gauge that. Where are you at in that range of lower, mid, or high-end homes?
Yeah, and especially if you get something that's maybe on the lower end, maybe it's been recently redone. Somebody put some money into it, fixed it up. There's a fix and flip of some sort. As long as it's quality work, you could probably see some decent equity gains as long as it's in an area that's growing or improving. If it's a bunch of other homes that need a lot of work, maybe not. Maybe you're going to still have the pretty apple in a bad bunch. But quality work, Charlie, that's important when someone's flipping a house. You know anything about that?
We see it all the time. And as a past landlord, and I love doing the flips, and I know you like doing projects too, there's money saving things you can do that are easily replaced later. I think the ones we struggle with is when we see people dig into a project and then go cheap and then it's covered up because it's the base layer and then you're putting drywall on top, or it's a lot more work to get to where they were. I don't want to see anybody overspend, but I'd rather see you spend the extra $500,000, $2,000 to get a good solid base that's going to last, and then you can do cheaper flooring and upgrade later, or cheaper countertops and upgrade later. Those are very superficial items, but the core, foundation, the walls, the wiring, the plumbing, make sure you spend the right amount of money. Don't shortcut what you could break later and then you got to open it back up. That's just never fun or cheap.
So getting then back to the renting versus buying piece of it, did you say you had somebody recently that closed on a house and should have maybe closed a couple years ago?
It was a good story. It was a little just hard to take on my side because their concerns were valid concerns, about 2.5 years ago, and great couple. They managed their credit well, they managed their debts well. They were ready to buy, they were just very nervous. And we had a great real estate agent on their side, very open and helpful, not pushy, and had myself on the lending side. So again, we're pushing you to get the right answers so you can be ready, but buy when you're ready. Well, 2.5 years ago, the housing prices were a little cheaper, and they were wanting to wait until the rates came down. Well, 2.5 years later, we closed. The rates basically the same. They didn't move much, but the price of the house went up, and now there's more competition for the price range they're in. And the neighborhood that they liked was just even more popular than it was 2.5 years ago. So they actually lost the appreciation and ended up paying for that in their sales price, which is still better than the renting they're doing, but they missed out on 2.5 years when they could have had something before and really had built up some equity and just had that 2.5 years of being home versus renting. So very exciting that they got there. I still look back and I don't know what else we could have done politely pushing and encouraging to get over that hump, because it is a big hump. You got to get comfortable, but you don't want to wait too long because you do miss out on some very nice appreciation. Especially the Des Moines Metro and Iowa in general has been so popular, and the markets have been strong in those lower and middle priced home ranges. It's fun to watch.
Yeah, but I also think that we as mortgage lenders, everybody thinks, well, you guys obviously want me to buy because you're a mortgage lender. You're not going to help me with renting. And I think there's a many stories on the opposite of, I don't think buying is a good idea for you right now. And if you want to buy, I'm absolutely here to help you. But I like to be a realist when it comes to helping a person out, to say, buying doesn't really seem like a great idea. Either we need to work on your credit, you need to stabilize your job, because you don't want to lose your job tomorrow and suddenly not be able to afford that house payment. So there's a lot of things that I think you and I have always said, what goes around comes around. And we're not here to just make a buck. We're here to make sure that the consumer has a good experience and that they don't put themselves in a worse position. Because the worst thing you can do is buy a house, have it go into foreclosure, and now it's ruined you for 7 years or 4 years or what. It's ruined you for a long time, and it's just not worth it.
No. And even if you don't hit the foreclosure side, you just hit something that you overcommitted and the expectation wasn't fair. Like my neighborhood, we've got some great project houses, but you've got light projects and you got big projects. And if you're not ready for whatever that is, but I'm there with you. We try not to toot our own horn, but when it comes to what we do, we're technically sales, but we don't act that way. I mean, we're here to make sure that you're financially confident, you're ready, and you're going to be better off when we're done with you, and you're going to enjoy that home. No one likes the payment, but you're comfortable with making that payment. You're going to be successful. We're not here to get you to close on a house and not have you be successful. That's bad for you, and that's not how we gauge success. It is not worth a paycheck for somebody who isn't being as successful as we want them to be. So yeah, it's not many people are like that, where everybody's going to get paid in the process. But if you focus on that versus focusing on the results, that's a totally different answer and a much different conversation.
Yeah. Well, let's talk a little bit about how buying or renting affects your overall financial picture. From a capacity standpoint, if your income is stable, buying a home might make sense, right? But if your job situation is uncertain, or you might be relocating soon, or anything could happen in your life, and you're just really not sure where things are going to go.
Right.
Renting gives you that flexibility. You can always break that lease and walk away from it. You might owe the deposit back. You might have some costs associated with that, but it's over. You can move out of state right away. Owning a home and trying to move out. I've got a woman moving from Kansas right now. She is struggling to find somebody to buy her house, and I tease her all the time, who wants to move to Kansas? But it's kind of true. Nobody wants to buy her house. So we helped her figure out a way to turn that into a rental, so that way she can at least get rid of it from her debt ratios. She's super excited. She's going to make a little bit of money on this house. But the point is, she wasn't able to just pick up and move as soon as she was ready to move. She has to find a buyer for that house.
And that's exactly it. It's making sure you can plan ahead and have a good out and make the decision accordingly. Because we have a lot of people that want to build, and it's hard to sell your house and build a house and have those time outright. The better answer is usually get your house sold and then focus on your build, even though it's inconvenient to move in between or moving from state to state. That was a great example.
Yeah.
Renting has its place. There's nothing wrong with it. It's just you deciding what you want and why you want it, and we can help you fill in the gaps as to how best make it happen.
Next one is diversification. So obviously owning real estate adds another layer to your financial portfolio. You might have investments in the stock market. You might have other side hustles, things like that. But obviously owning real estate and the equity that it can provide does add a totally different stability to and diversification to your portfolio. Renting obviously does not give you that. And hopefully, ideally, you are buying a property that maybe you can turn around and rent out to somebody else. So you've got the diversification of having a rental property.
Yep. Lots of options. And it's just like when you go to invest. A lot of people are very nervous to get to that investment piece. You just got to get used to it, step into it. You don't want to jump into the deep end. But a lot of people do want to get into being a landlord. But you got to be a homeowner first. That way you get that understanding and gauge the risk and move along. But yeah, it's another piece of the puzzle. You could do stocks, you can do bonds, you can do real estate, you can do digital currency. I mean, I don't do digital currency right now because it's not my favorite. It's not my comfort level. That's how some people are with real estate. They want to be a homeowner but not a landlord. And that's okay. It's an option that you can always explore.
Well, and I'll correct you and say that you should be a homeowner first. I have had a couple of people now buy houses, especially from out of state. They're buying a house out in Iowa as an investment property. They're from California area. They're just buying investment properties out here because our real estate compared to California is pennies on the dollar. Of course, they're going to just buy an investment property and make a little bit extra money and maybe move into it one day. But yeah.
Yeah, that's something we haven't seen in the past. Normally it's the experience level, but those are hiring property managers, and it's their market compared to ours. $200,000 house versus $1 million house, about the same. And the scale is way different than what we have. I'm glad we have our pricing.
It's here for now. We'll see how many California people move out here and jack it up. But
we've had a lot.
I hope we don't ever have oceanfront property. That's all I can say.
Yeah, we'll take the riverfront.
Payments. So while your rent may increase annually, a fixed mortgage payment is not going to increase with the principal and interest. Of course, taxes can increase, but taxes can also decrease. Charlie and I were talking about this a little bit before the show. My taxes have actually gone down a couple of years, and it's all based on your county and your school and your city and who's doing what. But I'm not going to complain about my taxes going down a little bit. It might only be $30, but it's better than the other way. Whereas if you're renting, your landlord says, I'm increasing rents today. They're increasing rents. There's nothing you can do about it.
Yeah. And most people forget that. I mean, you expect it, but you forget it. So if you have a 5 or 10% rent increase, and 10%'s not uncommon at all. It's not that much, but it adds up. 10% every year. Typically, your escrow account for taxes and insurance, it doesn't go up much unless you've been a new construction that didn't have taxes. And that first kick in, that's normal. But most existing homes, you don't change that much.
And then finally, the piece with your overall financial picture is that history of your credit. So having the house purchase and making the mortgage payments, those are going to give you a substantial improvement on your credit. And obviously missing payments is going to be a huge hurt, but we don't ever expect anybody to miss a payment.
No.
And, owning that home and having that history out there, you own that mortgage for 3 to 5, 7 years. That's a lot of credit stability now. And so say you have a slip up with a credit card payment, you forget on accident, whatever happens. it doesn't hurt as bad because you've got a strong mortgage history, and that mortgage was $300,000 and the credit card was $25. It's not as big of a deal.
Yeah, the mortgage being your biggest helper or hurter, the good consistency, just like you said, you make an oops, it makes you more bulletproof. You've got a big, consistent account that really shows your stability. It's fantastic.
Yep. So getting into the current market in 2025, we've seen a little bit of a shift. Mortgage rates have cooled off slightly from what they were in 23 and 24. And while inventory remains tight across the country, I feel like here in Iowa, inventory seems to be loosening up a lot. I love driving down the road and just looking around and seeing house after house after house listed for sale. I know I've spoken with a lot of realtors, as have you, that have said, my listings are just sitting. Buyers are not really ready to buy right now. I don't know if they're all turning towards renting because the rent markets have certainly cooled off. And when COVID was here, I feel like rents were just flying high, and landlords were getting away with it, and people were jacking up their rents left and right. Now I don't think I see that quite as much, and so then you're seeing people say, well, I kind of like my place. And some of these apartments around town, I don't know if you've been around and I've gone some ribbon cuttings and stuff. There are some really freaking cool places that I definitely couldn't afford to have in my house.
No, it's amazing the pretty shiny that they've gotten into stuff to attract people, and it's cool. But again, it's a temporary. I mean, most of that stuff is all surface level, but it's crazy to see what amenities they're putting in to attract tenants.
Yep. Well, some actionable takeaways. Run the rent versus buy calculator. We have one on our website. You can hop out there. You can put in your monthly payment that you're making on your rent. You can put in a house purchase. You can compare the two. If you have questions, you're running into issues with it, give us a shout. We'll run you through it. But you can see just your equity growth over the 3-5 years, whatever you're looking at. You can compare the monthly payments. You can decide whether or not it makes sense for you. Maybe you're thinking, I'm going to be in this area for another 3 years, and I don't know if I should buy or maybe I should rent. This is a great way to compare them directly one-to-one. The second thing then is, obviously, if buying makes sense, then let's talk. Let's get you pre-qualified. Let's look over your credit and let's have a conversation. Have a conversation with a professional that's not going to tell you have to buy a house. Again, if it makes sense to rent, it makes sense to rent. I've told several people, and they kind of look at you like, Kyle, why are you telling me to rent? I called you to buy a house. Because it's a good situation for you. It's better than buying. And then that final one is just start saving for a down payment. Whether you're going to be buying now or you're going to be buying in the future, start saving now. It never hurts to have more money in your bank account. And honestly, if you even have maybe more challenged credit, having money in your bank account can really substantially help you. We've seen people with 580 minimum credit scores actually get qualified because they've got $10,000, $15,000, $20,000 of their own money sitting aside. Those people that have a 620, 30 credit score may not qualify because they literally have no money in their pocket.
Yep.
It's really important to save that money. The algorithms treat your actual cash as being way more important than what your credit score is.
It's all about balance, and I'm with you. It's amazing the dynamics we see, but the more flexibility you give yourself for less stress, more success, cut out what you don't need, decide what your goal is, will help you get that target so you can get there as quickly and smoothly as possible.
Perfect. Well, that wraps up today's episode of The Lofty Lender. We hope you found the conversation helpful and feel more confident deciding whether to rent or buy in today's market. Be sure to follow us on all social media platforms and subscribe to the podcast for more exciting episodes. And remember, stay curious. We'll see you next week on The Lofty Lender.